Hey everyone, welcome back to episode 960 of Money Girl. I'm really glad to have you spending some time with me. I'm Laura Adams, an award-winning author, on-camera spokesperson, money speaker, and founder of The Money Stack. That's my Substack newsletter. Subscribers automatically receive my Money Success Toolkit, which includes the exact templates I use to manage my finances, so don't miss that. You can learn more, ask questions, and sign up for The Money Stack when you visit lauradadams.com. You can also leave a voice message with your question or comment by calling 302-364-0308. I'd love to feature your question on Finance Friday. That's our weekly Q&A bonus edition of the show. We love getting your questions and answering them here. So please send them in if anything's on your mind. You probably know that net worth is the value of your assets minus your liabilities. Here's a really simple example. Let's say you have a home and retirement accounts worth $500,000, and you've got a mortgage and credit card debt that totals up to $350,000. Well, in that case, your true wealth is the difference, or $150,000. The higher your net worth or wealth, the more choices you have, like starting a business, relocating to a new city, quitting a job you don't like, retiring early, or leaving a legacy to charities or loved ones. If you want to build wealth faster, despite having a modest or average income, today's show is for you. In this podcast, I'm going to go through 6 habits for creating more financial freedom and stability that give you control over your future, even when you're not a high earner. Often, I think it's challenging to see how setting aside small amounts of money can actually lead to a substantial net worth, like $1 million or more. It can be mind-boggling to hear that investing $400 a month, starting at age 25, with a 7% average return would result in over $1 million by age 65. I think most 25-year-olds would guess that they'd have to invest a whole lot more than that to end up a millionaire. The reality is you can easily create a 7-figure net worth by regularly investing a modest amount over a long period. And when you alter my example to investing $500 a month instead of $400, the same person could start their retirement with more. It could be $1.32 million. Alternatively, they could retire early at age 60 instead of age 65 with $1 million in investments. While you don't need a high income to become wealthy over time, you do need wise money habits. Your financial choices allow you to increase or decrease your net worth. So we're going to go through 6 ways you can build more wealth even with modest earnings. Habit number 1 is build investing into your spending plan. Since few people relish creating or sticking to a budget, I have air quotes here, I recommend creating a spending plan instead. It's a subtle difference, but it explains the purpose, which is deciding how you're going to spend money to support your goals before you even receive it. I think a lot of people just don't like the word budgeting. It kind of reminds them of dieting. Without a spending plan, it's way too easy to overspend in certain categories and leave others unfunded. For instance, if you're spending too much on discretionary purchases like entertainment, subscription services, and dining out, you probably won't have much or anything left to save or invest. I recommend prioritizing funding your goals and then ensuring you can live comfortably on the remainder of your income. For instance, contributing at least 10 to 15% of your gross income for retirement should be a non-negotiable part of your spending plan. And if you need more emergency funds, you could also save a percentage of your income or just a flat amount monthly until you reach an acceptable goal. By using a pay-yourself-first method, you treat savings and investments like a bill that you have to pay yourself every month, no different than rent or utility bills. And as you see those financial buckets grow, you might begin to love saving just as much as spending. Knowing that your future is funded first, you'll make financial choices that align with that reality. I've never really budgeted. I've just always done the pay yourself first method. Just make sure that I'm maxing out retirement accounts and savings for emergencies, and if that is set and in place, knowing that, really I can spend the rest of my income any way I like. An excellent way to incorporate investing into your spending plan is to make it an automated habit. For instance, you can set up recurring transfers from your checking account to your savings and to your retirement accounts, like an individual retirement account or IRA. Note that if you participate in a workplace retirement plan like a 401k, your contributions are always automated because they must be deducted from your paychecks before you ever see the money. And I'll talk a little bit more about retirement accounts in a moment. All right, the second habit is to get rid of high-rate debt. If you feel like you don't have enough income to do what I'm suggesting, paying yourself first, take a look at your debt. Often, having high-interest credit cards and loans can make it difficult to regularly save and build wealth. For instance, if you invest with an average return of 7%, but are paying credit cards at over 20% or higher, you're wiping out any investment gains. Plus, eliminating balances on expensive credit cards frees up more money that you can use to save and invest for faster progress. There are certainly different ways to create a debt payoff plan, but I always recommend the avalanche method. This is where you pay down debt in order of highest to lowest interest rate. That gives you the most interest savings, which can be used to pay off debt faster. If you're only making minimum payments on credit cards, I want to challenge you to push yourself to stop making new charges and to send progressively higher payments each month. Getting your high-rate debt under control is essential for building a high net worth. However, debt with relatively low interest rates that typically come with money-saving tax deductions should be paid off last. I don't want you to stress out about those. Now, these are going to include mortgages, home equity lines of credit, or home equity loans and student loans. Only pay off those debts early after you've eliminated high-rate debts and you've got plenty of emergency funds and you're regularly investing at least 10% of your income for retirement. Habit number 3, fight lifestyle inflation. If you've been living on a low or modest income and then suddenly start earning more, it can be tempting to inflate or upgrade your lifestyle. You might believe that you deserve a better car, a bigger home, or a long overdue and expensive vacation. Believe me, I've been there. A wise finance professor once told me that the secret to building wealth is to earn more, but to never spend more. It sounds simple, right? The bottom line is that even when you can afford to spend more, it won't necessarily increase your net worth. Wealth comes from keeping more of what you earn, no matter how much or little you make. So always remember that inflating your lifestyle will typically prevent you from building wealth in the long run. Instead of buying fancier furniture or a new car, consider saving and investing more when you have excess discretionary income. Now, I'm not saying to never enjoy a luxury here or there. Certainly I do. And life is about balance, not deprivation. However, allocating all or most of a raise or windfall toward your financial future can ultimately lead to feeling the most fulfilled and secure in the long run. Habit number 4, make simple investments. Building wealth is not about picking the next hot stock or spending all your time watching the financial markets. As I've mentioned, it's about the habit of regularly setting aside money so the growth in the markets yields moderate returns over the long run. I recommend setting up automated contributions to a retirement account, such as a 401k or IRA that gets allocated into low-cost, broad market index funds or ETFs. For instance, most accounts offer a fund that tracks the performance of the S&P 500, which is an excellent choice for most investors with a long time horizon. This is known as indexing. You're investing in one or more index funds, and it provides instant diversification with historically strong returns. Consistent, modest contributions can grow surprisingly large over time. Habit number 5, maximize tax-advantaged accounts. I've mentioned that using tax-advantaged accounts like retirement accounts is a wise choice. They offer built-in tax benefits that save money in the current or future years, and that can add thousands or tens of thousands of dollars to your balance if you take advantage of them. If your employer offers a workplace retirement account like a 401k, 403b, or 457 plan, be sure to participate. For 2025, you can contribute up to $23,500 or $31,000 if you're over 50. However, you can always start with a small contribution and gradually increase it year by year, eventually maximizing it. Additionally, many employers provide matching funds to encourage your participation. Always contribute enough to receive a full match when possible. Those free additional funds can significantly supercharge your wealth building efforts. They offer an instant 100% return on your investment, and that's before any market growth occurs. There are other tax-advantaged accounts you might want to consider, like a health savings account or HSA, a flexible savings account or FSA, and a 529 college savings plan, depending on your goals and financial situation. And number 6, track your progress. It's really easy to fall into bad money habits or lose the motivation to achieve your financial goals if you don't track your progress. Having all your assets and liabilities documented in one place is really helpful. I've been doing that a long time. I closely track my net worth using a document I call my Personal Financial Statement, or PFS, and I have a template. It's a free download when you subscribe to my newsletter, The Money Stack. And I hope you'll take advantage of it and use it to either start or update your personal financial statement. I think observing changes to your net worth over time is really helpful. It allows you to make more informed financial decisions. Plus, even modest gains reinforce good money habits and help you stay focused on your long-term goals. I hope this will help you stay motivated and know that you can build wealth even on a modest income. You know, the secret, again, it's starting early. It is getting really consistent with saving and investing. And if you have any questions about that, I hope you'll send them in to me. That's all for now. I'll talk to you soon. Until then, here's to living a richer life. Money Girl is a quick and dirty tips podcast. We've got a great team that works on the show. I want to thank Steve Rickyberg, who audio engineers the podcast. Holly Hutchins is our director of podcast. Morgan Christensen is our advertising operations specialist. Rebecca Sebastian is our marketing and publicity manager. And Nathaniel Hoops is our marketing contractor.